Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code. This is the Forex Super Model review for Friday the 5th of November 2021. The time has just come up to 4:30 GMT. Asian session coming to a close, European session firing up, our lunchtime, North American session. Right, yesterday and Thursday the 4th of November we had a negative opposed driver in the pound at -507. Front and back door flows mainly going into the yen at +363, into the dollar at +217, and the euro was a negative rock at -73. Activity ±580. Now over the week we've had this same batting order in complexes, but different drivers. Now we've got a negative unopposed driver in the pound over the week at -557. No backdoor flows. The opposing positive flows mainly going into the yen at +355, into the dollar at +170, and into the euro is the positive rock at +32. Activity ±557. Now yesterday we had this BOE Bank of England rates decision, and the main shake-up in that was the sort of issue with the number of monetary policy members who voted for a rate hike was reduced, and this led to a massive flight from the pound. In other words, they became less aggressive on rate rises, and the pound started selling off heavily throughout the day or the afternoon really, and you had this pound weakness driving funds. So people were selling the pound, and the opposing positive flows, they were selling it against primarily the yen. And this was interesting because the yen was having to suck up all these it was basically having positive flows rammed down its neck by the weak pound. And over the week we can see we've got a similar situation. We've got activity ±557. That sounds like a lot of activity, but activity of about 1200 for the week is pretty high, so it's about half marks. But recently that's going some. So anyway, talk about that in a minute. Intraday then, this is Friday the 5th to about 15 minutes ago, the Asian session. We've got a negative unopposed driver in the euro this time, -35. No backdoor flows, but the opposing positive flows mainly going into the yen at +27, into the dollar at +8, and the pound is the neutral rock at 0 in the middle. So, and its activity ±35. So in the Asian session then we've got the euro driving coming off. So we've got euro weakness. We've still got this yen strength here a bit. We've got a bit dollar strength, and the pound is starting to excuse me. The pound is starting to think about dropping now, because it's at a neutral 0 position. Right, stop that there and look at the flows. Right, we've written up the flows then. So the euro is weak except against the AUD, the NZD and the Swiss. The yen is strong across the board. The pound is strong except against the yen. The Swiss is strong except against the yen, the dollar and the pound. The CAD is weak except against the AUD and the NZD. The AUD is weak except against the NZD. The NZD is weak across the board, and the dollar is strong except against the yen and the pound. What have we got then? We've got yen strength still in the Asian session, to exclusion of all else, and we've got New Zealand weakness, and we've also got AUD weakness bar the New Zealand. So we've got secondary AUD weakness, and we've got secondary pound strength apart from the yen. So what's going to knock it about, or has knocked it about? So we talked about this Bank of England rates decision, which has sent the pound tumbling, and then it's rammed these positive flows into the throat of the JPY. And we've got this today. We're on NFP, non-farm payrolls, and we've got CAD employment change. So bear in mind that we've had a strongish ADP, which is the employment report, which comes out on the Wednesday. That's quite often sort of a pretty wild indicator of where the NFP. So you know, it can conform and it can't conform, and it can be completely miles out. So don't pay too much attention, but it normally shakes the markets up. Next week then we've got pretty much light data until Wednesday, Wednesday the 10th. So whatever sort of theme is put in place after NFP, it's quite likely to continue into next week, mid next week, Wednesday. Anyway, we'll stop that there, write up the asset classes, and then do the final analysis. Right, we've written up the asset classes then. So US dollar index, basically a while ago it had this big pump up, it came right back down, it's now knocking on the door at the highs. It's 0.12 from the high, so it's 12% off the model high. So the dollar has strengthened. Gold normally won't like that, but gold's been dirging around. It's 0.5, it's half mark, so it's halfway. Oil did this big break, broke about 46 to 47% above the resistance. It's now come back. It's 0.29 from the high, so it's come back 29% from the modelled high. Wall Street, S&P Tech, they've all got this break, and then they're holding at the highs. Wall Street is 0.16 from broken from the resistance. S&P is 0.2, 20% above the resistance, and the tech is 0.19, 19% above the resistance. So 16, 20, 19, pretty much lockstep. Now yesterday it was interesting. If you're watching the divergence between the indexes, which we do, you could see that the tech was steaming, and the main driver of that was Nvidia. They were buying that like it's gone out of style. That was up about 12.5% at one point, maybe higher. And this is a component of the tech and the S&P, but it's a bigger component of the tech in relative terms. And this was creating this divergence in the indexes. And normally we like to trade that. Normally we jump in on the tech and selling the S&P in suitable amounts. But we were having issues with the FX transmissions, which we'll talk about in a minute. Anyway, US 10-year in the bund. This is the prices. We had this big punch down in prices, rising yields, and now we've had this bounce, rising prices, falling yields. US 10-year 0.32 from the floor, come up 32% from the floor, and the bund has come up to half marks. So relatively speaking, European yields are weaker than US 10 years. And you know, this bond market issue with the US 10-year weaker yields and yet a stronger dollar, so that's something to bear in mind. Copper then's been chopping about, did a break, it's come back, it's 0.4 from the floor, so it's 40% above the model floor, below half marks, so it's weak. US steel is the opposite really, it's above half marks, it's 0.42 from the high, so it's thinking about strengthening up. So we'll get rid of that and then just do the final analysis. So today we've got NFP, and we've got a strong dollar sort of running into it. We've got equities at the highs, and we've had a pretty solid sell-off in the pound. Right, so let's just grab this and see what's going on. So we've got dollar, euro, yen, pound, CAD, AUD, NZD, and the Swiss. Okay, so the dollar then, the dollar index is sort of pretty high. The bonds are the yields are sort of talking at cross purposes to that because the yields are coming off. We've got the yen transmission, we've got equities. Equities are at highs, yet we've got a strong, we've got a positive yen transmission, which is because of the pound. The pound is ramming, so the pound's gone very negative, and the pound's ramming positive flows into the yen and into the dollar. So that strength in the dollar can be partially explained from the pound weakness, and then the euro sort of playing secondary fiddle to all those transmissions. The CAD then, oil's basically started to come off quite significantly, and if you look at What's the CAD doing? The CAD's weak except against the AUD and the NZD. So you've got weak commodity currencies here as well, and yet you've got this strong equity position, which is interesting as well. So and you've got copper, which is weak, relatively weak. So commodities are relatively weak. So inflation is an issue there. Maybe inflation is tempering, or it may be manipulation from China on copper. But anyway, there you go. So let's have a think what's going on. So today we've got this NFP report. We've had an ADP report which was positive, so that may well be an indicator, but as you say, that's quite often not the case. But anyway, that's a possibility. So and next week we're running into soft data in terms of light data until Wednesday. So and equities are parked at their highs. Now it looks likely this should just be a pause before one more push up. So and the push up is likely to be, they'll be buying in Friday in the North American session today, holding them over the weekend, and then punching them up on Monday in the Asian session. So the likelihood is we're going to go risk on. And the beauty of risk on at the moment is the fact that the yen has been pumped up by the falling pound, and therefore normally when you get risk on you get a negative yen transmission. So we've got all these positive flows in the yen, which will be very nicely coming out and augmenting this rise in equities. And that's what we think. So you're likely to see a weak yen. So let's box it in really. You're likely to see a weak yen, minus on the yen, and then the dollar. The dollar normally, when you get a sort of a risk on environment, you get the dollar coming off neutral to weak, and then so if you've got flows out of the dollar and the yen, they've got to go somewhere. They're either going to go into the euro or the pound. And we did think that the pound was going to come back after the MPC meeting, except that vote situation sort of wrecked the situation to the point where the markets became blinkered and just wanted to pile out of the pound. But we do think the pound's going to start hockeying again. So the likelihood is you're going to get flows out of the yen into the pound and neutral into the euro, and then you're going to start to see a bump up in commodity currencies as well, probably a neutral to fall off in the Swiss and so forth, and then the CAD will be neutral to negative, probably off the back of weaker oil. So that's where we are. So if you want to have a go, obviously timing is going to be important, but the elbow room is for further equity rises, because we've had this yen complex which is now artificially high, and everything should be pointing now towards a falling yen and a rising equity transmission. So you'd want to be short the yen, and then your timing will be critical really on the pound, because the pound's been got a negative sentiment at the moment. So you could dodge the pound and look at it sell the yen against something else, maybe the commodity currencies, which will be coming up. So I hope it was useful. Tomorrow we've got the weekly review, which is the data cycle and all so forth, and if not, we'll see you Monday for the daily briefing. So thanks for watching. Goodbye.